Greetings everyone, welcome aboard. Happy Wednesday to you guys. It's February 9th, 2011. It's a wacky Wednesday here in a live trade room. Let's see how we did today, guys. What's the most important that happened today? Well, Wednesday morning, hump day. We know Wednesday mornings are crude inventories. So the first thing on my mind today is I've got inventories at 10:30, which means I've got to be looking closely at the crude today. We had our eyes on crude all morning this morning. We also knew we had 10 o'clock Bernanke speaking. Now, this wasn't just some normal Bernanke speech, right? Tiny Tim, right? The gruesome twosome. What happened this morning was, though, this wasn't the normal speech. This was about the budget. This was about spending in Washington, right? This is a big-time concern among politicians, among Main Street, Wall Street, the world. So Bernanke speaks at 10 o'clock this morning. His topics are about the budget, and we think to ourselves, this might be a slow day, right? If Bernanke's speech is on the minds of traders, they're going to be waiting for 10 o'clock. We actually ended up profiting from it too. It was great today. Bernanke starts talking about we can't buy our way out of a recession today. Remember that? Those were exact words. Now, what do you think the market's going to react to that? Of course, right? Dollar bearish, gold bullish, crude bullish, right? We made a great trade there, guys, just after 10 o'clock. After seeing Bernanke pull that out of his mouth, right, we knew how the markets would react to that. There was lots of waiting, though. There was lots of waiting. The biggest thing was, now think about this. This is the perfect storm. We already know things might be slow on crude. But then you've got Bernanke at 10 o'clock. We were prepared this morning to wait until 10:30. Literally after crude and then after Bernanke. We didn't have to wait that long, but that was what we originally thought was going to happen this morning. Lots of waiting. Now, gold and the dollar were exactly the same. Dollar sideways, gold sideways. It almost looked like the gold was tick for tick with the dollar today. Now, remember, the dollar, when the dollar is rising, okay, and we see when the dollar is falling like it was this morning, right? Dollar kept dropping this morning early. We looked at the euro. Now, the euro is that valuable market. The euro is the market we watch. Now, why? Because if the dollar's falling, if I see the euro falling as well, and again, this is all on the blog, guys. Search for the dollar correlation on the blog. And this topics to that, lots of information on the blog about this. But anyways, we watched the dollar drop today. Dollar drops, euro did what? Euro was rising. That confirms the correlation. Now, sometimes when the dollar drops, right, we'll have the euro drop. What's happening then? Well, people are leaving the euro and probably going into the gold. So sometimes this correlation breaks down. The variable we look for is the euro. If the euro is moving opposite to the dollar, I now know my correlation stands strong, and I can use that to trade the rest of the day. Today we saw the correlation confirmed, right? Previous days, though, we have not, mainly because of bailout concerns in Europe, right? ECB's announcements from Jacques Trichet have caused people to leave the euro, right? Get into U.S. equities. Most importantly, though, buy gold, right? That's been the big thing. And again, want to remind you guys, too, use the euro, right? The euro currency future, the 6E. And again, ask questions tomorrow in the room. It's on the blog as well under dollar correlation. And it talks about how there's 2 times when that dollar correlation doesn't work. One is low volume. The second one is the euro, right? Make sure you guys ask me more questions about that tomorrow in training. Now, gold, very slow. But this is a great example on gold today of how a little bit of patience goes a long way. Remember what happened today? 11:30 European close. We always wait patiently for 11:30, don't we, guys? We never get done with our day early. Even if I see no volume at 10 o'clock in the morning, I'm going to at least come back and check at 11:30. That's when the European markets close. And recently what's happened is the European markets closing, they've taken all their concerns from the ECB and they've put them right in the U.S. markets at 11:30. So we've seen a lot of great volume. Today was no different. Finished up our day on gold with one of our biggest trades of the day. Crude was on our mind all morning, though. We were aware that news was at 10:30. So this morning, again, was that challenge. It was very slow. We got patterns, though, on crude, but we're always thinking in the back of our mind, remember, it's a Wednesday, it's a Wednesday, it's a Wednesday, it's a Wednesday, right? How many times have we been caught on the wrong side of a trade because you got crude acting up before the news? So this morning we had that on the back of our minds. We knew if I take a trade on crude, I've got to look for double confirmation, right? Multiple time frames, momentum confirming, right? Second push from big buyers or big sellers. How many times do we need that second push today to really get that move going? Next Wednesday, you'll know exactly what I'm talking about, guys. If you missed this today, guys, you really missed a lot. Today was a great day, mostly because we used a combination of technical and fundamental analysis. Now, I'll be honest, we don't get that opportunity very often as day traders, right? As technical analysts, we're chartists. We watch charts. Now, compare that to a Warren Buffett or a George Soros, who probably uses more feel and more fundamentals. For me, though, I'm a technical trader. I'm a technical analyst. I make a habit of ignoring the news and trading the reaction, right? I use momentum and trend lines and speed and volume and price patterns, right? I don't use fundamentals very often because the type of trader I am. Plus, as a day trader, oftentimes we don't know all the information. See, that's the big thing, right? I'm sitting here in my home office. So are you. I don't have a whole team of analysts around me. I don't have $1 billion budget to get me right on the floor of the exchange, and I can have lots of Harvard graduates telling me what to do. Right? We're just lonely old day traders. So we trade reactions. We never even try, right, to weave that web, right, of economic reports. Because we all know, guys, all that matters is the reaction. Now, today it was kind of easy, right? We had Bernanke say we can't buy our way out of a recession. Now, obviously, if we don't see that one coming, right, obviously you want to be buying there, right? Buying gold, buying crude, dollar bearish. Then at 10:30, what do we see? We saw crude come out within expectations, but we saw gasoline inventories were 200%. 2.2, we got 4.4 gasoline inventories. Right? Now, these were two examples of where we really didn't need to know that much. Higher inventories, we knew to expect price to drop, so we waited for price to drop and we traded inventories this morning. Right? So a little bit of a combination of technical and fundamental analysis. We knew what the news said. We then waited for the reaction to that news and used technical analysis to plan our trades accordingly. Right? It's kind of a hybrid, using technical analysis to confirm, but the fundamentals tell us the overall direction. All right, guys? If you missed that this morning, come in and join us as a member, and we'll go over all that in training. Now, we had a great day today. It didn't feel like it because we had a real slow start. You can see here, guys, 2, 4, 6, 8, 10, 12 trades today. 222 ticks, guys. 220 ticks. That's $2,200.